Today is not pretty at all for the altcoins. Everything is red, but one token, Aerodrome, is able to keep the head above the water. The question is why? Let's have a look at the on-chain metrics. Let's have a look at the buy and sell pressure. Let's try to figure out where Aero is going from here and whether or not this outperformance can potentially continue. Now, Aero by far is the largest decentralized exchange on the base blockchain. The entire blockchain had a trading volume of 1.9 million in the last 24 hours. Aerodrome was a large part of that, 845 million. Aero is also the largest trending token in terms of liquidity. There's 78 million worth of Aero on the chain. Yet in the last 24 hours, we only saw 1,177 wallets interacting with the token. The question is always about risk to reward. When we look at the historical market cap of Aerodrome, we are already comparatively high. And the real question is, how much more upside is there? We are currently at 1.2 billion market cap, and Aero topped out at 1.5 billion in December of last year. On-chain, we've got 655,000 holders. And that holder base is growing over time. Both the number of retail investors and also the number of whale investors is going up. This is an all-time chart. On the left, we see the number of wallets that have at least 1,000 Aero tokens. So we're not counting every single small wallet that might just have a few cents worth of the token. Here on the left side, we only count the wallets of at least 1,000 tokens. The current price, that's a bit over $1,000 worth of the token. In the middle, it's a minimum holding of 10,000 tokens. On the right, it's a minimum holding of 100,000 tokens. All wallet cohorts tend to increase in numbers. So the investor base is growing, which should be good long-term for the price. Yet, even though this is a very long-term chart that starts in August of 2023, we did see our corrections in the past. So just because the number of investors is going up doesn't mean that the price cannot come down. Now I'm covering Aerodrome regularly on this channel. So if you don't want to miss the next video, feel free to subscribe over here. I publish videos not just on Aero, but on various DeFi protocols regularly over here. Now, fundamentally, the question is always, what's the potential demand versus supply for a token? And the demand can be correlated with the usage of the platform. As more people use the platform, the demand for the token should go up as well. But how is the usage actually developing over time? How much growth do we actually see? What we've got over here is the total value locked, or the capital that's locked in the Aerodrome decentralized exchange over time. It peaked in December of last year at 1.2 billion and since then rather went down. We are somewhat recovering since April of this year. Many altcoins did, but we are very far away from the height of December of last year. When we measure the total value locked in Ethereum, not in US dollars, the chart is not pretty at all. Here things are going down since October of last year. Now, why do those charts look so different? It's because a lot of the capital on Aerodrome is at least indirectly bound to Ethereum. Many liquidity pools are in ETH, and so when ETH is going up in price because there's all this demand through the ETFs and through the treasury companies, then of course the TVL on Aerodrome is also going up. But if the TVL measured in ETH is not going up, that's a sign that the platform isn't growing as quickly as the demand for Ethereum. And that's a problem, right? We take on more risk. By buying something like Aerodrome, we should also get more return. Why else take on all that risk, right? We need to get higher risk-adjusted returns. Here's the decentralized exchange trading volume over time. It's also not growing this year. And here's the number of transactions over time. It's also rather stagnant, at least since beginning of the year. We have seen quite a bit of a drop in July of this year. Here's the revenue of the platform. It's shrinking even faster. And here's the TVL of the basic Aerodrome versus Slipstream. So Slipstream can be compared with Uniswap V3. It's a way to bind liquidity just in a tighter trading range to make capital deployments more efficient. Now, this chart over here might suggest that maybe the state of Aerodrome isn't really that bad, because maybe there was simply just a migration over to Slipstream, to the more efficient kind of Aerodrome. But that's unfortunately not true, because when we measure the total value locked of Slipstream itself in Ethereum, we also see this rather underperforming the demand for Ethereum. The activity as a whole is shrinking, and on top of that, the share that the bots have of that activity is going up. So the organic usage of the platform is going down even quicker. Now, maybe, relatively speaking, the price of Aero is low enough that would still justify buying into the asset, because there is a potential catalyst. Coinbase planned to integrate decentralized exchange trading into the app so that any Coinbase user can not just trade the Coinbase listed assets, but all of the assets on the Base chain. And that news that came out 3 months ago brought in a lot of hope for Aerodrome, but right now we don't yet see any impact of that news on the on-chain data. Here's the Aerodrome price relative to the Ethereum price. Since April of last year to today, Aerodrome underperformed Ethereum by 31%. It tends to be rather on the higher end of the trading range. Now here's Aerodrome relative to the others market cap. So how is Aero doing relative to all other altcoins? Again, it tended to rather underperform. There are constantly lower highs and lower lows. And again, if we stay within that trading range, the potential reward of maybe 16% relative to the potential risk of maybe 65%, it's not that great. It doesn't really tell us a great story to invest heavier into Aero. I don't have a crystal ball either, right? I'm simply just sharing the data as I see it. The problem with Aero, as with many altcoins, is that there is an increasing token supply. And if the demand doesn't grow as quickly as the supply grows, then the price has to underperform the rest of crypto. On top of that, a few select assets in crypto do have constant buying pressure from Wall Street, like Bitcoin and Ethereum through the ETFs and through the treasury companies. Aerodrome does not have that luxury. And so here is the unlocks over time. There's more and more Aero hitting the market. And again, we need to see usage growth, hopefully through the Coinbase integration that helps Aerodrome break out of this trading range. Besides the spot market, we've also got the perpetual futures market. So the levered bets on the price. They at least have short-term quite a bit of an impact on where the spot market is going as well, because there are arbitrage bots that arbitrage between the perpetual futures market and the spot market. If there's a lot of selling on the perps, then this will also depress the spot market at some point. Now in the last 24 hours, we only saw 54 million worth of trading volume on spot. But compare this with the perpetual futures market. Here we had 1.3 billion worth of trading volume. So really, at least short term, all of the price discovery happens with the bets on the price, the derivative markets, the perpetual futures. And here we do see quite a bit of trading volume, and there is positive correlation between trading volume and the spot price. When there's more trading volume on the perps, the spot price tends to be high. When there's less trading volume on the perps, the spot price tends to decline. And there's even more correlation between open interest and the spot price. Again, when there's more bets on the price and the spot price tends to be high, when there's less bets on the price, spot tends to go down. And historically, we are very high in the open interest. If this was to deflate, if this was to come down, then Aero would come with it. The Aerodrome price would have a very hard time to go up when open interest goes down. And again, with that trading range and that trading range, I'm not so convinced if short-term Aerodrome is really the best bet right now. If you've got some unique insights regarding the Coinbase integration and the usage of that integration, then you might have an edge in the market and you might be able to make some money with a contrarian bet. But just looking at the current momentum, looking at the current leverage in the asset, it's quite risky to have a larger allocation towards Aerodrome, in my opinion. Now, there is somewhat of an argument to be made that altcoin season might be imminent. And so that's based on the others dominance chart. It shows how much of all of crypto in percent is currently in the altcoins that are not in the top 10. And this seems to bottom out at very similar levels, and it might have just bottomed recently. In the past, when we were at similar levels, the altcoins outperformed the rest of crypto by more than 300%. So I understand this argument, but there's a bit of a problem with the argument, because the other dominance measures the market cap, but market cap is a very different thing to prices. There's a dedicated website called Tokenomics AI that does nothing but measure the token inflation of various altcoins. So let's have a look at Aptos, for example, here at number 1. This is the Aptos price relative to the altcoin market cap. Since March of 2023, this went down by 88%. And the reason is an ever expanding token supply. As there's more and more tokens hitting the market and supply supply is higher than demand, then of course the price has to go down, at least relatively speaking. This is the Aptos market cap chart over time. It's at very similar levels compared to February of 2023 at roughly 3 billion, so barely a change. But in February of 2023, the Aptos price was at $18. And now it's at $4.39. So this is how much impact token inflation actually has. The others dominance does not look at prices. It only looks at market caps. But we do not get market cap returns. We get price returns. Market caps can be unchanged. Prices won't be unchanged if the supply just keeps on increasing. Now, how much of a problem is this really in the grand scheme of things? Is this just a few select altcoins, or do we see this on a broader scale? The answer is somewhat depressing. We unfortunately do see this on a broader scale. So each week we see roughly 1 billion worth of token unlocks. If we do not see at least 1 billion of additional demand coming into the altcoin market every single week, then the prices have to come down. The others dominance might be unchanged, but the price of individual altcoins definitely do get negatively impacted. Aptos is currently the 42nd largest cryptocurrency. It's just an example. Let's have a look at the top 100 cryptocurrencies. In the last year, Bitcoin went up by almost 100%. We've got 26 out of 100 altcoins that did better than Bitcoin. 73 altcoins did worse than BTC. And so here's what I personally do. I'm simply just betting on bad altcoins to continue to do worse. So we can just flip this chart around. This is the Bitcoin price relative to the Aptos price. At the bottom, we've got the others dominance again. So the others dominance did not change at all in the last 2 years, right? It went flat while Bitcoin's price relative to the Aptos price appreciated by 400%. So this is really where I believe the alpha in crypto is. It's the market inefficiency of highly inflating altcoins. I'm following this strategy already for roughly 4 years. So I'm betting on poorly performing altcoins. I'm betting on them to go down further, while I'm betting on rising Bitcoin, Ethereum, and Solana. And because of that, I outperformed just dollar cost averaging into Bitcoin. Dollar cost averaging into Bitcoin is shown here as this light gray line. But I got the performance that's shown in the black line. So there is a way to beat the market without trying to find the few winners. We can simply bet on the market structure, on the constantly increasing token supply of many altcoins. It's maybe not as straightforward as just buying a single token. Some things have to be learned, but that's why I made dedicated videos on the topic. I try to make this as simple as possible, so there's really only 2 videos that have to get watched. The first video is using perpetual futures to bet on relative valuations. The second video is risk management with relative valuation bets. Once you've watched this 1 hour of content, you know exactly what to do to get this kind of performance, to set up positions like this. After you've watched those 2 videos and you've joined the community, I will send you my favorite trade that looks very similar to Bitcoin relative to Aptos. If with that trade you do not make money after 1 month of holding the position, then I will refund the membership fee to you. So those $125 are actually not what you're risking. If you don't make money with this favorite trade, you just get that money back. Just message me and I will refund you, no questions asked. Of course, besides this favorite trade, I will also share every single trade that I execute in real time as well. You can simply just copy trade me. A link to Premium will pop up directly on the screen over here. Just click on that. It will lead you to the website. If it's your very first time here, feel free to subscribe as well. I publish videos on YouTube regularly. See you next time on YouTube or see you in Premium. Cheers!